Nothing about this is sudden. But before we go further, pause for a second and ask yourself something uncomfortable. If this were truly unexpected, why were markets already sensitive to Gulf headlines? Why were defense budgets already rising? Why were alliance drills already expanding? Why were energy insurers already adjusting premiums? Surprises don't prepare the system in advance. Patterns do. When the United Kingdom makes a sharp military adjustment at the exact moment U.S. warships shift toward Iran, the surface narrative says escalation. The deeper reality says convergence. In a world carrying more than $300 trillion in global debt, where sovereign liabilities have grown faster than GDP for over a decade, and where NATO defense spending has climbed to its highest sustained level since the Cold War, this isn't improvisation. It's structural gravity. When debt climbs, when currencies strain under interest rate pressure, when alliances tighten in response to rising challengers, and when energy corridors grow unstable, military motion stops being optional. It becomes arithmetic. History shows something most headlines won't say clearly. Great power confrontations don't begin with missiles. They begin with balance sheets, with overextended guarantees, with monetary stress, with supply chain fragility. The warships are the last chapter of a story written years earlier. Look at the sequence right now. The U.S. Fifth Fleet shifts assets toward the Persian Gulf. The U.K. adjusts maritime readiness. Diplomatic language hardens. Oil futures spike within minutes of regional headlines. Shipping insurers quietly raise premiums. Defense ministries coordinate messaging. These are not random developments. They are steps in order. And once the sequence reaches this phase, outcomes narrow. This is not about Iran alone. It is not about Britain alone. It is not even about America alone. It is about a recurring mechanism that governs overextended systems. The mechanism unfolds in 4 stages. First comes foundation. A dominant power establishes financial supremacy, trade dominance, and credible military reach. Its currency becomes trusted. Its navy protects trade lanes. Debt remains manageable. Confidence is high. Second comes expansion. Commitments multiply. Alliances widen. Military bases expand. Currency issuance accelerates. Debt grows faster than productivity. Influence spreads outward, but exposure spreads with it. Third comes stress. Challengers rise. Energy routes become contested. Currency credibility weakens at the margins. Inflation emerges. Regional conflicts test alliance cohesion. Military deterrence becomes more expensive to maintain. Fourth comes inevitability. A flashpoint forms in a strategically critical region. Naval deployments accelerate. Alliance commitments activate. Financial and military systems converge. The event appears sudden to the public, but structurally it was locked in long before the headlines. This is the machine. And what we are watching now fits that mechanism with unnerving precision. To see it clearly, we need proof. Not speculation, not theory. Proof. Consider Britain in the early 20th century. In the 19th century, Britain built the foundation. The Royal Navy controlled global sea lanes. The pound sterling anchored international trade under the gold standard. London was the financial capital of the world. British debt was substantial, but supported by imperial revenue streams. Confidence in British supremacy was near absolute. Then expansion intensified. Germany industrialized rapidly. Naval competition escalated. The Anglo-German naval arms race accelerated after 1906. Britain extended informal security commitments across Europe. Colonial obligations multiplied. Military spending increased to maintain dominance. Influence expanded. Exposure expanded with it. Stress followed. By 1914, Europe was entangled in rigid alliance structures. The assassination in Sarajevo did not create instability. It triggered a system already under strain. Financial markets shut down. Gold reserves tightened. Mobilization timetables forced rapid escalation. Britain entered World War I, not because it desired immediate conflict, but because the architecture of alliances and commitments left little room for neutrality without surrendering status. The war appeared sudden. It was structural. Now shift to the United States in the mid-20th century. After World War II, America built the foundation. Bretton Woods established the dollar as the global reserve currency, convertible to gold at $35 per ounce. The U.S. Navy secured maritime trade. Industrial output dominated the globe. Debt levels were manageable relative to growth. Confidence was unparalleled. Expansion followed. NATO solidified. Military commitments spread from Europe to Asia. The Vietnam War escalated. Domestic spending expanded under social programs. Dollar issuance increased to finance both war and welfare. Gold reserves fell as foreign governments converted dollars. Influence widened. Fragility widened with it. By the late 1960s, stress became visible. Inflation rose. Foreign governments questioned dollar convertibility. Fiscal deficits mounted. Energy vulnerability intensified as Middle Eastern geopolitics grew more volatile. Then came inevitability. In 1971, Nixon closed the gold window. The dollar was no longer convertible. Bretton Woods ended. 2 years later, the 1973 oil embargo triggered stagflation. Energy security became central to U.S. military doctrine. Naval presence in the Gulf deepened. The shock felt sudden. The pattern was not. Go back further. The Roman Republic built its foundation on disciplined legions, stable currency, and expansion funded by conquest. Expansion increased territorial reach and administrative burden. Standing armies became permanent fixtures across provinces. Currency debasement began gradually to fund costs. Stress manifested through civil wars, inflation, frontier pressures, and political instability. Inevitability followed. The Republic transitioned into imperial autocracy. Militarization became permanent. Currency integrity eroded further over centuries, weakening the system from within. Different era, different tools, identical structure. Now bring that lens forward. After 1945, the United States anchored the global financial system. The dollar became the reserve currency. The U.S. Navy guaranteed freedom of navigation. The United Kingdom remained deeply integrated through NATO, intelligence networks, and financial interdependence. Energy flows from the Middle East were stabilized through security partnerships. Foundation. Since the early 2000s, expansion accelerated. U.S. Military engagements stretched across multiple theaters. NATO expanded eastward, defense commitments widened into Eastern Europe and the Indo-Pacific. U.S. federal debt surpassed $33 trillion. Global debt crossed $300 trillion. Central banks deployed quantitative easing at unprecedented scale after 2008 and again during the pandemic. Influence expanded. Exposure expanded. Stress intensified. Russia's invasion of Ukraine accelerated NATO mobilization. Energy prices surged globally. Inflation across G7 economies reached multi-decade highs, in some cases exceeding 8 to 10% during peak periods. Central banks tightened aggressively, raising borrowing costs and increasing sovereign debt servicing burdens. Simultaneously, tensions around Iran escalated through sanctions, proxy conflicts, maritime incidents, and regional instability affecting Gulf shipping and the Red Sea corridor. Insurance costs for vessels transiting strategic choke points increased. Oil markets reacted instantly to regional threats. Roughly a fifth of global oil supply passes through the Strait of Hormuz, making it one of the most sensitive energy arteries on Earth. Stress is not theoretical, it is measurable. Now observe the fourth stage emerging. When U.S. warships shift toward Iran and the U.K. adjusts military posture and alignment, this is not symbolic theater. It is alliance architecture activating under structural strain. Energy security plus financial fragility plus alliance commitments equals naval consolidation. The Persian Gulf is not just a regional flashpoint. It is an economic pressure valve. In debt-heavy systems, inflation shocks are politically destabilizing. If energy prices spike sharply, central banks face a dilemma: raise rates and deepen recession risk, or tolerate inflation and risk currency credibility. Either path carries cost. So maritime security becomes economic insurance. This is why warships move before open war. This is why allies align before a declared escalation. And this is why calling it sudden misses the underlying mechanics. But here is where retention matters. Let's confront the uncomfortable question directly. Does this mean war is inevitable? Not necessarily. Stage 4 does not guarantee immediate conflict. It guarantees entrenchment. Entrenchment increases the probability that miscalculation becomes cascade. A maritime collision, a drone strike, a proxy exchange. In tightly connected systems, small sparks can trigger outsized reactions. Financial markets amplify volatility. Energy prices respond instantly. Political rhetoric hardens. Domestic audiences limit diplomatic flexibility. When alliances are already mobilized, stepping back becomes reputationally costly. This is how cycles lock in, not through desire for chaos, through structural rigidity. Now consider the psychological dimension, because this is where modern audiences disconnect. When dominant powers perceive relative decline, they rarely retreat quietly. They project strength more visibly. Carrier strike groups become floating signals. Joint exercises become publicized demonstrations of unity. But visible strength often masks underlying concern. Why shift warships unless risk has increased? Why coordinate allied posture unless credibility needs reinforcement? Because stress has risen. Iran's geographic position amplifies this dynamic. It borders the Strait of Hormuz. It influences proxy networks across the region. It operates under heavy sanctions, reducing the incremental leverage of additional economic pressure. So maritime signaling becomes more central. At the same time, Western economies remain deeply dependent on stable energy flows despite advances in renewables. The energy transition is underway, but fossil fuels still anchor transport, aviation, shipping, and industrial production. That reality has not changed, so Gulf stability remains structurally indispensable. Now let's correct a common retention problem in geopolitical analysis: fatalism. If everything is a machine, why watch? Why care? Because patterns do not eliminate agency. They constrain it. Understanding constraints allows positioning. Volatility is not an anomaly in late-stage systems. It is transition. Markets will continue reacting sharply to regional developments. Defense budgets are unlikely to contract meaningfully in the near term. Energy corridors will remain militarized. Ignoring that trajectory does not reduce exposure. Understanding it does. Diversification, whether for nations or individuals, becomes strategic rather than optional. Overconcentration around fragile supply chains increases vulnerability. Monitoring structural pressure nodes becomes more important than chasing headlines. The Strait of Hormuz, the Red Sea, Eastern Mediterranean energy routes, these are leverage points within the global system. Now confront the most dangerous illusion. This time is different. Before 1914, economic integration between Britain and Germany was deep. Many believed trade would prevent war. It did not. Before 1971, the dollar's supremacy seemed permanent. It was not. Before Rome's transition, the Republic seemed durable. It was not. Technology does not abolish structural cycles. Artificial intelligence does not dissolve geography. Digital finance does not eliminate energy choke points. Cyber capabilities do not replace physical sea control. Power still rests on logistics, energy, and financial credibility. And when those pillars strain simultaneously, military instruments regain prominence. American exceptionalism does not exempt the U.S. from structural laws. British pragmatism does not erase alliance obligations. Modern optimism does not override balance sheet mathematics. The machine responds to imbalance, not narratives. So here's the practical takeaway. Do not treat geopolitical volatility as random noise. Treat it as systemic signal. Do not assume rapid de-escalation simply because conflict is costly. Structural pressures often override cost logic. Do not confuse visible calm with underlying stability. Preparation is not panic. It is awareness. And awareness begins with pattern recognition. When you see naval deployments near a critical energy artery at the same time, debt burdens are high, inflation risk remains politically sensitive, alliances are tightening, and global rivalry is intensifying, understand what stage you are observing. Foundation built decades ago, expansion accelerated in the early 21st century. Stress visible over the past several years, inevitability emerging now, not necessarily of war, but of hardened alignment. The UK's move is not a standalone event. It is confirmation. Confirmation that alliance architecture is tightening. Confirmation that energy security remains non-negotiable. Confirmation that debt-heavy systems cannot absorb sustained commodity shocks without consequence. Check. Verified. Undeniable. The question is not whether the machine exists. The question is whether you are paying attention while it moves, because what feels sudden today was engineered across decades of policy, debt accumulation, alliance building, and strategic competition. And what seems distant tomorrow may already be structurally locked in. If you want to understand what the next phase looks like, whether entrenchment stabilizes into deterrence or fractures into confrontation, you cannot focus only on headlines. You must watch the system, follow the debt, track the energy arteries, monitor alliance cohesion, observe where financial stress intersects with military positioning. That intersection is where history accelerates. And that acceleration rarely announces itself politely. Stay aware, stay analytical, and stay ahead of the pattern. Because once you truly see how the machine operates, you stop reacting to headlines, and you start anticipating them.